Hi everyone, Drini here, and welcome to my channel. So we're going to continue our Layer 1 series where we take a look at the blockchains that host a lot of gaming cryptos, see how they're performing so that we can identify all of the potential scenarios, the key levels to watch out for so we can plan accordingly. Today we're going to talk about Matic or the Polygon network because the high TPS that the network provides is very conducive to a lot of games. So let's dive into the charts to see what's going on. So I have the overall macro weekly time frame for Matic, and if you notice, Matic was pretty much flat throughout most of its history when it started in April 2019. But on a 4-month time frame spanning from early January of 2021 all the way to May of 2021, Matic went up by 15,815%. Ever since it went through this particular growth pattern, when you look at it on a macro scale, Matic has pretty much been flat ever since, where we have been hovering between the $3 range right here and the 80-cent range right here. Now, zooming in closely, ever since the high right here of around $2.70 all the way till now, one of the things that's interesting about Matic is while it kept showing a lot of strength, where we didn't really test the 55 EMA right here, even during the May to July capitulation in 2021, Matic has unfortunately slowed down quite significantly. What's happening with Matic over the past year and a half now is, if you notice the pattern, Matic has been forming an ascending wedge right here. So an ascending wedge, for those of you who are not aware, is when price coils up, it keeps going higher, but it's starting to coil up and significantly slow down when it comes to the gains that you can have when a price is in this particular structure. The thing to note about ascending wedges though is they are typically bearish structures, but only when you break through the lower trend line right here. Unfortunately, in January of this year, we have officially broken through this lower trend line right here. So on a macro time frame, what's going to happen here? So the thing with ascending wedges is the technical target for this type of structure when price officially breaks through the downside is the price level where the candles of the ascending wedge touch the lower trend line. So in this case, the technical target for this particular structure is actually here at around 79 cents. So what's potentially going to happen here is we will face strong support levels. So for example, this is a particular strong support level, the current price level of the 55 EMA of around $1.33. But if Bitcoin continues to show weakness, or if we have a major capitulation event, then expect that we may fall all the way down here. Whether or not it takes some time for us to get here, or whether it's a single capitulation event, given that Bitcoin is prone to those 50% drawdowns, then this is something to watch out for and also prepare for moving forward. So this 79 cent range also coincides nicely with this particular structure right here. If you notice, this particular break, this particular wick right here, or you can take this particular wick right here, it doesn't really matter. It appears that we are currently undergoing an ABC correction right here, where this could be your A wave, the relief rally to the lower high could be the B wave high, and we are currently in a C wave correction. When you also draw a reverse Fibonacci, where this is the 1, so this particular wick right here to the break in structure where we officially went below the 55 EMA with the all-time high right here, when you look at where the 1618 extension will be, it is also the same level as the wedge technical target. So everything lines up to a 78 cent or a 79 cent eventual destination for Matic. Hopefully that would be the last point before continuation to the upside. If Bitcoin continues to be weak and the crypto markets continue to fall, this is one target that we can aim for, but do not underestimate the potential for further downside when it comes to the crypto market, because sometimes capitulation events can really bring us down significantly. And the thing with Matic is this 79 or 78 cent range must hold, because when you look to the left, there is nothing else that is protecting Matic from continued downside if we break through this support level in the future. From a Fibonacci standpoint, you have a large chasm right here that will bring us all the way to 57 cents. From a structural level, the current support level is roughly at the 2.414 of around 40 cents, and the 2.72 extension is currently at 45 cents. This price level really becomes very, very important. So if you're somebody who's very, very interested in Matic, what do you do then moving forward? This is where, once again, our strategy of waiting for Bitcoin really has to take place. If Bitcoin continues to go on a particular downtrend and has a capitulation candle, that could be your potential entry point number 1, where what's potentially going to happen here is on the downside, when we finally have a major capitulation event, then wherever the price lands, so it could land here at the 79-cent range, but it could also go extend far beyond. Wherever that price is during that Bitcoin capitulation, that would be your entry point for Matic. So it is best right now to have a cash position on hand and save up for this type of event. Otherwise, the bullish case is, once again, wait for Bitcoin price action to go above the 21 weekly EMA right here, above our weekly structure, because that will give you confirmation that we are back on an uptrend. So the more conservative approach is wait for the Bitcoin price action to come up. And when it happens, go back to the Matic price action, see where the price ends up. So for example, maybe Matic will be around here. That would be your entry point on a conservative level, because at least you have positive certainty that we are now back on an uptrend for Bitcoin and the rest of the crypto markets. So let's see how it goes. Unfortunately, given Bitcoin and global asset weakness, everybody is really in a risk-off mode. So in this type of environment, cash is king, patience is rewarded, and only come into the market when certain conditions that you have identified are met. Otherwise, if you try to come in now, you don't want to be the guy in the middle of everything here while everything still goes to hell. You're going to be stuck with your position right here. And when it picks back up, you are once again stuck in this middle position. It will take longer for your portfolio to recover than just waiting in the sidelines for a while, coming in when you have certainty to the upside or certainty to the downside.